मेरा जूता है जापानी, पतलून इंग्लिस्तानी। तो अभी भी आपके जूते जापानी नहीं होंगे, बट they'll be Adidas or Reebok. The rupee at independence was 3.3 to the dollar.
Right.
We've had decades of depreciation. I'm yet to find somebody who's in an HNI category who has 100% India orientation.
So I see two sides, right? One side is that they're still very bullish on the entire global narrative that US will also grow, US stocks will also do well, and Indian equities will also do well. Then there is a completely another side which believes that Trump wants to crash the dollar.
If the rupee keeps depreciating in the same historic trend that it has been since independence, 3 to 4%, then the Nasdaq only has to give 10% return. The remaining 3-4% is currency.
Hi guys, welcome to Aspro's podcast once again. And today I have a very special guest with me. His name is Neil Borate. He has been ex-deputy editor at Mint, and now he's running his own thing under the name of Fine Print. Now you must have seen Neil talking a lot about the rupee depreciation lately. And rightfully so, a lot of people have raised their certain queries about this particular topic, that why a failing rupee can be detrimental to Indian retail investors. What are the practical solutions for a normal retail investor to kind of manage their portfolios accordingly? So we'll discuss each of the aspects very carefully today. Do watch this video till the very end. You'll get a lot of insights. So hi Neil, welcome to
Thanks for
Aspro's
having me,
podcast.
Ashras.
So Neil, as soon as I think that when the rupee did touch 90 to 91 rupees, a lot of halla gulla happened, in the news, and a lot of people have been talking about it. Largely, obviously, the Indian rupee has been depreciating not from today. It has been depreciating since years, right? But I think 90 is that sort of a figure when everybody's bell sort of rings.
Yeah.
Right. So just to start with it, we'll keep it in very layman terms. If you can explain, what does a failing rupee or depreciation of rupee means essentially, and how does it impact a normal person like you and me in India?
Sure, Ashras. So it's interesting. So rupee briefly, I think, touched 91, which is India's calling code. So a lot of jokes and memes were about that. Essentially, it means the loss of purchasing power. So a lot of our consumption today is international. There is that whole Hindi song, right? मेरा जूता है जापानी, पतलून इंग्लिस्तानी. तो अभी भी आपके जूते जापानी नहीं होंगे, but they'll be Adidas or Reebok or some multinational, some non-Indian company. Your jeans probably will be Levi's, again some non-Indian company, and everything that a lot of what you own will be manufactured outside India. That all goes up in price because all of that is imported, and you can't. Travel becomes more expensive. Education becomes more expensive. Everything to do with non-Indian consumption just goes through the roof.
Right. And largely, there is one purchasing power angle that is obviously attached to it. In terms of whatever savings and investments that we're doing in India, right? Because most of our allocation is in this country, whether it is in the form of debt, fixed deposits, or equity. A rupee basically goes from 80 to 90 rupees. How does it impact my portfolio today? If I have a 10 CR corpus or a 5 CR corpus, essentially, what is the impact that corpus is getting when rupee depreciates?
So think of it this way. If you have a pure rupee corpus, only Indian equities, only Indian debt, you will not see the effect of that depreciation. But even if half your corpus is invested in dollar assets, and I'm assuming that, let's say that dollar asset has been steady in price, right? So we'll remove the effect of whatever that asset is. But just that depreciation alone has added 10% to return. So just think of cash. Let's assume that half your portfolio is in US dollar cash. Suddenly you have gotten 10%. It's more than the stock market has given this year. So every year it adds to returns of people who have diversified outside India.
Right. And largely, there is one interesting aspect that I read about, and it was also highlighted by Saurabh Mukherjee recently, CIO at Marcellus, that essentially whatever prices that we see in India, whatever we are paying in terms of products and services, it is largely, because we see it in rupee, it's basically sort of an illusion that is being created in front of us, because ideally because dollar being the global reserve currency, uh, largely we should be looking at everything from the dollar perspective, right?
Absolutely.
And so the natural sort of question which came to my head
Mhm.
was that when we if we should look at purchases in that regard, then should our net worths be also calculated or judged in the same dollar aspect?
100%. So if you think of today's wealthy Indians, almost every wealthy Indian has an international aspect to their life. Either they themselves have studied abroad, or they have worked abroad, or they want their kids to study abroad or work abroad, right? I'm yet to find somebody who's in an HNI category who has 100% India orientation, who never even travels abroad. So
Right.
it does make a difference what our net worth is in dollar terms, and the fact that rupees depreciation has cancelled out stock market return this year, which means we are at sort of back to base on net worth, is a sad fact.
Right. And so there is a sort of a counter argument to this as well. I'm not sure if that counter argument holds true in terms of how we look at our investments and everything. But one argument that is being made positively in the case of why rupee is depreciating is because whenever a large economy or a growing economy, whenever they grow, and we have seen in the case of Japan as well and other economies as well, that
Hmm.
largely to make their exports competitive,
Hmm.
countries basically sort of depreciate their currency a little bit to make exports easier, right? So is that truly the case, or are there other economic angles also attached to it that why rupee is sort of failing or depreciating?
So that would be the case if our exports are price sensitive.
Right.
Our prime exports, IT services, are, I don't think that price sensitive. It's more about service quality, about what's happening in the tech AI world. Pharma, you could argue a little bit more price sensitive, but we are not a low end manufacturing economy, which generally tends to be very price sensitive. So those economies like China or now increasingly Vietnam, they when they depreciate their currency, they're actually benefiting because they're able to sell more cheap goods to the US. And
Right.
even that model now has sort of declined considerably because Trump has clamped down on it. So in our case, the benefits of rupee depreciation are not very strong in my view.
Got it. And if one thing is very clear to us is that, uh, and it's not just that it's HNIs or ultra HNIs are exposed to sort of the global spending or having a participation in global economy. I think largely, like you said, we have been consuming global products since when our economy is open, right? Since 1991, uh, you go in a flight. If I see what piece, so I like in today morning I came, or I took a flight from Delhi to Bombay. So what all things, let's say, did I consume or people around me were consuming, right? Whenever the plane that I'm going in is a Boeing plane or an Airbus
Correct.
plane, it's not an Indian plane,
Correct.
right? Then largely whatever is being served to me in that particular aircraft is also largely all Western made,
Yeah. The
right?
fuel that
The
drives the plane
fuel,
is imported.
yeah, it's imported. Then other than that, when I see what people are doing on their phones, they're either opening Netflix or Amazon Prime or
Yeah.
Hotstars of the world. Uh, I think it's fair to say that a fairly middle class or an upper middle class Indian also is exposed to global products as much as not in the paying capacity tangent as to what how an HNI would be, but we largely are, right?
That's true.
And it can't be ignored,
Absolutely.
right? So then, what is the solution to protect our portfolios to be ahead of the curve in terms of the rupee depreciation? Because largely, if we see the pattern, rupee has been depreciating not since today. In the last 10, 15 years, we've seen like it has almost come from 45 to 90. It has
No, no,
almost
more
doubled.
than that.
Yeah,
So the rupee at independence was 3.3 to the dollar.
right,
We've had decades of depreciation.
right,
Um, in the earlier days before 1991, rupee was a controlled currency. Even that did not stop depreciation. So what used to happen is the government would try to maintain the peg for as long as they had enough fiscal strength, and then something would happen to shatter that, and then overnight they would devalue the rupee against a dollar. So no amount of control has changed things.
right, absolutely. So like I was asking you about, like, what is the solution then? What is the, if let's say a particular retail investor is watching this right now and he wants to stay ahead of the curve, what should he be doing in order to maintain his purchasing power and be competitive about his net worth?
Sure, sure. So most very retail investors do the smartest thing around, which our mothers and grandmothers have done for centuries, which is buy gold, right? Gold is your easiest exit out of the rupee.
Okay.
Um, now, gold is not a perfect exit because gold has its own cycles. Right now, we
Mm.
are in a huge gold bull cycle,
Right.
but um, there are other options. Many of them were available to retail investors until very recently. So, mutual funds that diversify into overseas markets, those were available in the same way that any other mutual fund was available. You could do a 1,000 rupee SIP also in them. Unfortunately, the industry hit that cap in 2022, and there are some funds with some limits left, but that's a shrinking list.
What is that cap exactly? Like, how much is the cap which is set by RBI?
Yeah, so it's 7 billion, but there are two caps. So one is the industry cap, which got hit. Then
Right.
each AMC has its own cap.
Okay.
So some of those AMC caps have not yet been utilized, but it's a matter of few months.
Got it. So, if let's say that cap basically gets hit, so that means that these fund houses or these AMCs cannot go beyond, let's say, a particular.
They can't invest any more money outside India
Right. So I think that is what has happened in the case of Parag Parikh, right? That
for a long time. Yeah.
yeah. So they're at, if I'm not wrong, 30 to 35% of their allocation was to
Correct.
global funds,
Yes.
global
Yes.
stocks, or global
Global stocks. Yeah.
global stocks. So then, if let's say, if are there any other options also available for Indians now, that because if let's say the limit has been hit, then basically
Yeah.
you come at a halt.
Yes. Correct. There are two options. One is that you open a US broking account from
Okay.
India, and there are a number of fintechs solving for this. Um, this involves a little bit of study and a little bit of process because opening a broking account in India is now extremely easy. You have to just do video KYC, and within 5 minutes, your account will be opened if you have a Aadhaar and PAN. For overseas, it is similar, but there is a step of remittance. So you have to transfer your money from rupees to US dollars. And that step involves either going to a bank and filling a form or filling it online in your banking portal. But it's a little bit complicated. You have to understand that form. And there is also a cost. So banks, when they convert your money, they charge a fee, and they also convert it at a rate which is slightly higher than the market rate.
Good.
So that takes a cut out of your remittance. So once retailers understand these two things and they bake in this into the calculation, then yes, they can do this.
Right. So you're basically saying that how we open our broking accounts with Zerodha, Grow, or any other platform. Similarly, there are Indian platforms available that are, those are licensed through, I think, SEBI, IFSCRA, and a lot of other.
Yeah. So one caveat on that: many of the platforms currently available do not have a license from either SEBI or IFSCA, which is the Gift City regulator.
Okay.
They are in the process. So um, some of them, for example, have a SEBI license for domestic operations, but
Okay.
they don't have a SEBI because SEBI is not empowered to regulate overseas investment.
Right.
But of course, all of these players have a tie-up with a US broker. Without that, you can't have
Right.
a
Got it.
broking platform in the US. And of course, those US brokers are licensed by SEC over there. So
Hmm.
there is regulation.
Got it. Got it. And are there enough? Is there enough interest which is now growing amongst these AMCs or like mutual fund houses? Like obviously, Parag Parikh has been a very prime example of that. But are you seeing that? Is that something which is also being picked by PMSs or AMCs across the board, that they are willing to invest their clients' money and their own money in global stocks?
Absolutely. There is a huge amount of interest in launching global funds from Gift City. So let me do a quick segue into Gift City. This is supposed to be India's version of Singapore or Hong Kong, where it becomes a place for money to come in and for domestic investors to diversify outside in a regulated manner. So through Gift City, a lot of funds have already been launched, and many of them are in the pipeline. They've been filed, and regulators going through those applications. So in terms of which all have been launched so far, um, On the retail side, you have the first ever fund, which is DSP Global Equity Fund.
Right.
Then there is Parag Parikh. So Parag Parikh has two passive funds tracking the S&P 500 and the Nasdaq respectively, and those will start accepting money from Jan, is what I'm given to understand. They also have a PMS. Parag Parikh also has a PMS in Gift City. Edelweiss recently announced the launch of their Greater China Fund, which is already there
Got it.
in India, but because of the RBI limit, they're only accepting 5,000 rupees per month in their India fund. Gift, there's no restriction. So same fund is available in Gift, which invests in China, Taiwan, Hong Kong. So these are just a few examples. There's a lot of other AIFs, lot of funds in the pipeline, as I said.
Yeah. So, there is a lot of things happened recently, especially with regards to Trump tariffs, and a lot of uncertainty is being caused right now. The entire gold rally that we're seeing is largely because central banks are buying it, not because our Indian mothers or, sometimes they feel that because they buy a lot of gold or they hold a lot of gold, that is the reason why, let's say, eventually gold prices go up. But largely it has been the activity of central banks, right?
Sure.
And this is sort of a devil's advocate sort of a stance as to why even dollar could suffer, right? And I would like to know your opinion in that regard. Is that a lot of people are claiming right now in the markets? I see two sides, right? One side is that they're still very bullish on the entire global narrative that US will also grow, US stocks will also do well, and Indian equities will also do well, largely, right? Then there is a completely another side which believes that Trump wants to crash the dollar, right? Because they have a very insurmountable debt that they have of $37 trillion, which has been increasing largely over a period of time. And global economists are at the verge that they even don't know how can they solve this, right?
Sure.
Every day something comes up that they'll do maybe something with Bitcoin or they'll do something else. But largely Trump's focus, if you look, largely has been towards this, right? So in that context, how do you see global investing playing out? Because US is obviously one of those biggest factors that where largely the money will go, right? China is obviously there, Brazil is also there, all other economies are also there, but largely US plays a major factor in global investing.
Sure.
Right? So how do you see all of this right now?
So I do believe that there is a trend of de-dollarization, and that's going to continue. Not just because Trump may want the dollar to decline, although that also has its part, but also because the world has lost some amount of trust in the US dollar. After the Russia-Ukraine war, when Russia's assets were frozen, they were taken out of the SWIFT system, a lot of competing powers like China would have reasoned that we want to insulate ourselves from this happening to us ever.
Right. And that is largely why central banks went on a spree of buying.
Correct.
Yeah.
Now, both scenarios, by the way, are negative for India.
Okay.
So let's take the first scenario where US continues to thrive, dollar regains its momentum, its primacy, and rupee keeps depreciating, right? We are not benefited from that. Second option is de-dollarization, where money flows out of the dollar into number one precious metals, but also more into emerging market economies, currencies, etc. Now, most sort of India-only sort of fund managers or analysts will say this is beneficial for us because we are an emerging market. But because we are such an expensive market, because we have numerous restrictions on foreign investment and taxes on them, we are not that favorably placed vis-a-vis a China, vis-a-vis a Brazil, a Mexico. So many other countries are likely to do better than us. So in either situation, we are not necessarily very well placed.
So, I was watching actually one of your interviews with Swanand Kelkar, right? So, just to give people the context, he's someone who has been, I think, at Morgan Stanley in the past and now is working directly with Ruchir Sharma, who's one of the most successful global investors to be considered, right? And you sort of asked him a question, how should actually one go about global investing from an Indian standpoint, right? And because a lot of expenses that we have globally are majorly two or three, which is our vacations, right? Which is our maybe children's education that we send them there. or largely it could be healthcare for somebody, right? So these are the 3 or 4 major buckets which I see. So how can we sort of plan for these goals, or can there be a goal-based investing aspect related to this in the case of global schemes? Or like how would you go about it if, let's say, somebody wants to be ready in next 10-15 years for their children's education fund, because they'll send them to either UK, US, or Canada? How could they benefit out of this, that so that their portfolio is actually ready in dollar terms to combat that?
So, as you said, kids' education is a strong goal that can be planned for. And one of the ways to approach it is because there is a TCS or tax collected at source above 10 lakhs. You could put in, let's say, something just a bit below that, 9 lakh 90,000 every year, and not have to deal with the tax. And that money also compounds. So at the end of 10 years, you have a substantial corpus. Um, it may not be enough to exactly meet the expense of a US college, but it'll go a long way because you would have saved in the currency of the country that your kid is going to be studying in.
Got it. So, we've been talking about a lot of technical things we also discussed, but what I also want to give viewers as the context is that, so a lot of Indians are able to relate to the historical Nifty returns or the index returns, right? So, for example, if Nifty 50 or Nifty 500, let's say, sort of gives us 10-year historical returns, or let's say 12%, 15%, whatever that number is, and if Nasdaq or let's say S&P 500, what kind of returns have they given historically, so they can draw a picture of what the difference is in terms of the returns they're eventually getting.
Let's look at historic returns first. If you take returns from the day on which India's most famous Nasdaq fund was launched, which is Motilal Oswal Nasdaq ETF, that is a 23% CAGR in rupee terms. That has beaten almost every Indian fund category, hands down. Nifty, mid cap, small cap, it's just exceeded everything. Now, you can argue that that was a point at which Nasdaq was very favorably placed because the preceding 10 to 13 years
Was zero returns.
was zero returns.
Right.
But going forward as well, if you see the innovation that's happening in the US in AI tech, and not just AI, but across the board, um, there is a strong chance that those earnings continue to beat India.
Right.
So I would hesitate to put a number to it because so many things are variable. But at least we know this: if the rupee keeps depreciating in the same historic trend that it has been since independence, 3 to 4%, then the Nasdaq only has to give 10% return. The remaining 3-4% is currency.
Got it. Right. And we can sort of also look at it in this way that largely all tech innovations or those kind of innovations have largely come out of the US, and they are basically the epicenter of it. Just China is sort of taking that lead and leap forward. So these are actually two such markets where our money should actually be deployed in order to take advantage of those innovations that are happening there,
Correct.
which are, let's say, not available to us in India. So, there is also a bit of conundrum which, let's say, investors might feel is that because generally all of these funds that we talked about, whether it is Motilal or Marcellus or some other AMCs, they have been also very bullish on the India story, right? That the next 15-20 years, because of our demographic dividend, the way we are placed right now, we are the highest growing economy in certain terms. So there is a case to be made that Indian equities largely will do well. And then obviously there is this paradox of rupee depreciation. So how does one sort of decide or do asset allocation around global investing?
So scientifically speaking, asset allocation should actually be in line with our country's weight in the global stock market. So if we were to take, let's say, the all country world index or any index that represents the entire world, India is 3 to 4%. Now, practically speaking, we can't replicate that because we live in India. So you have to find a compromise. I think a practical compromise is a 60-40 allocation, 60% domestic, 40% global. In earlier years, people would say, oh, just do 5%, 10%. I think it's rubbish. It's not going to move the needle for anyone. It has to be enough to compound and make a difference to your to your financial goals, and therefore I would say ideally 40%, but as close you can get to it as possible.
So this 60-40 ratio you're talking about in the sense that does that also just in terms of pure equity, or how about other assets like gold, or you know uh, which people would also like to have?
Yeah, that's a good question. Um, for now, I would say that 60/40 is part of your equity allocation,
Hmm.
because global fixed income is also interesting, but traditionally yields have been lower than India, and it's difficult to access. So, of the equity, I would say 60/40.
And largely, Neil, I think in the last, what I would like to ask is that uh, anything that you would like to convey in terms of that it can make people understand uh, how does a falling rupee hurt you in the long run, and largely uh, what kind of impact we see in our portfolios which we don't feel today.
Hmm. I think anyone who has a cousin visiting from abroad would know how the falling rupee has hurt them.
Right.
वो बंदा तो बहुत ही खुश होगा. Um, you just have to think of your budget for next year's vacation. You just have to think of
Hmm.
what if you want to do a master's abroad and currently it costs $30,000 in fees, how that's gone up. So it's pretty evident.
Right. And when you say, the interesting thing when people go to abroad, and is it largely because of the currency difference, the why people are able to score their retirement corpus by just 40 or 35 by spending their time in US,
Hmm.
Canada?
Hmm.
So is that the currency hedge basically that they're able to take advantage of, or is it also because of the economy there?
It's multiple things. So anyone who's moved to the US to work typically is a tech
Hmm.
worker. So they get RSUs or ESOPs in their own company, and those have skyrocketed, many of them. They tend to invest their savings in US stocks and ETFs. That has also compounded faster than Indian equities. The dollar has risen against Indian equities. So everything has supercharged
Hmm.
their net worth versus their cousins who live in India and work in even Indian tech companies.
So thank you so much, Neil. This was really an insightful one. I think people will actually have a lot of questions. Do tell us in the comments, guys. We'll be happy to answer them. We'll clear out all your doubts, and do follow Neil. He keeps sharing a lot of insights on global investing on his LinkedIn, on his YouTube channel. So thank you so much, Neil, for doing this today.
Thank you for having me.